Hello, everybody. GM, good day, good evening. How's everyone doing today? So I want to start off with the crude. It's in no man's land. I still think that there's the potential of a short squeeze here. Yesterday, this was a pullback, and we held a fib level right here, 3060. If we attacked yesterday's highs, we could have a breakout to take us to 38. So next couple of days are going to be pretty critical here, maybe even today. I still think there are more shorts in this market than longs. I hardly hear anyone talk about recommending people buy the crude. The most bullish comment I hear is don't be short. So call me the ultimate contrarian. I'm still sticking with this crude. I even bought a little natural gas yesterday. As far as the dollar is concerned, got a nice little tweet from Alien that's saying that the pound could rally back towards the 4.4 area. So I have some moving averages around 360. Of course, 3.5 was the breakdown, so why not? Get a little ABC back to 144. Actually, cable's showing a little more relative strength than the euro, although the euro is beginning to diverge down here. So I'd be careful about the long side of the dollar today. US dollar yen. Still think that there's going to be, I know a lot of people are shorting it, looking for a collapse. I could see a pullback, maybe to 112. Not looking for a collapse right away. And if I'm right about the crude, Canada could roll over. Again, Canada's kind of like the crude. We take out this low. I think we're going to 34. We penetrate the 39 level. And then the 50% retrace comes into play on USD CAD. Up around 140, 140. Those are my calls. The next one's yours. Who's in the house? Who's in the house today? Hi, Alexandros. SW's Long Oil. Ron the Dutch. How are you, buddy? Adinda, 50%. What's your target up there, Ron, in the end? 115, 116. We get back to the breakdown in the end. Hello, Alien. Little Fish James, how are you? Welcome to the FX Street video channel. Ray, Pan, Roland, Ibby, JM, hello, Peter, Jake, FX video, what's happening, Jay? Tosin, how's it going, buddy? Yeah, I saw that tweet. Saw your tweet on the Swiss. Abel, how are you, my friend? Yeah. So it could zig or it could zag. Okay. I think we're going to this line. I remember you showing this in the interview, that we need a third drive up here in the Swiss. If you want to show the daily on that, this is a daily. Maybe extend it out. Everyone thank Alien for his daily Swiss look. Thank you, Alien. I have an excellent interview lined up for today. We'll be speaking to Peter Temple. Peter Temple is a renowned futurist from World Cycles Institute. So this is a guy who studied Elliott, Dewey, Wheeler, all the guys in the 30s. Should be a very interesting interview. I know he's very bearish equities. So we'll have a grizzly bear here. Hello, Fab. How have you been, buddy? Thank you, Alien. Everyone doing okay? Hello, Mauricio. So I'm looking forward to my conversation with Peter later on. Hello, Sinatra. Jax, how are you, buddy? Alexandros, how are you? Everyone doing okay? So we'll see if we could squeeze the energy bears here. Why, yeah. You know, guys, one of the ramifications of the world being in global financial stress is that stress lowers human beings' immune system. And that's why you're hearing about things like Zika. A lot of these negative cycles that people like Martin Armstrong talks about, war cycles. There's also a pandemic cycle. And I couldn't help but have a chill go down my back when I was listening to Jeb Bush, who's trying to make a run, unsuccessful so far, talk about how you need a commander in chief with a steady hand. And he talks about things that, he brought up things that can happen, like what happened with George Bush and 9/11. And the word he kept using, and I've heard it more than once, is pandemic. So I don't know, Jeb knows something. He keeps bringing pandemic up, which is kind of unusual for a politician to even know that word, let alone bring it up when he's campaigning to be the nominee of the Republican Party. And then I'm reading more and more about Zika, that it's not just something that can affect unborn children, pregnant women. They're not sure how it's transmitted. They think it could be also transmitted sexually. It can lead to a condition where you lose control of your arms and legs. I don't know the medical term, but they actually say Franklin Roosevelt didn't have polio. He had this. So I know I'm going to be running away from mosquitoes this year. I hate mosquitoes. Here's my question to you guys. Why did God make mosquitoes? I used to ask, why did he make flies? But that's my question. Who needs them? I heard someone say that mosquitoes kill more people than any other animal on the planet. So that's my pandemic rap. Who's they? The World Health Organization? Who's they? Hey, Goldie, how are you, buddy? Oh, birds need them? Why? For food? Hi, Izzy. How are you, brother? Why do birds need mosquitoes? Yeah, who's they, man? You're they. I think Sinatra. Hey, JM, how are you? I think Sinatra's part of the great conspiracy. He's a Mason. BW, how are you? Artem. Really? I didn't know that. Everyone, welcome Artem to our community. This is your first time here, Artem? Welcome to LAR. Yeah, that's true. Sinatra is a trilateralist, a Bilderberg. Oh, I got Mauricio to chime in. Third time? Okay, welcome back. Oh, okay. They're just here because they're here. No purpose. Well, the euro's approaching that 110.80 level that I diagnosed. I wouldn't be short here. I thought we'd get down to this 110.80, 111 area. Oh my God, the Rockefellers. See how we're beginning to diverge? It almost looks like a 3-drive, little wedge. Maybe back over 1150, I'd go with it. JM, maybe back over 1150. Let it prove itself. Otherwise, why can't we do this? Looks like there's some kind of wedge developing here. Or if you want to hear the ice crack, you buy it with a stop under this candle. Thank you, Alien. See, Mauricio has all these other shows going on, but I still think Mauricio's favorite segment is LAR with Don Dale. Because I don't think he participates in the other ones. Mauricio misses LAR. Mauricio misses LAR. Don't you, buddy? What do you got, Sinatra? What kind of fool am I that's afraid of mosquitoes now? They're selling it? Wow. In a monkey. Yeah, really. Yeah. Wow. A man-made geo event. From that rhesus monkey. Everything came from that monkey. It's the year of the monkey, isn't it? Chinese year of the monkey. He doesn't miss it. New lows coming. Maybe we're going to try that 1080 level. Yeah, isn't it that's really something? The same HIV monkey. Well, you know, there's too many people on the planet. So they're going to try and cull the population with disease and war. Look how many people are getting killed in Syria and everywhere else. How many people died in World War II? How many people died in World War I? And then we had the Spanish flu epidemic. There's just too many people on this planet. Well, you got to go to FXCM. Where do you reside? Anise, where do you reside? That's B of A? What bank is that? Bank of America? Well, you have to go to your rep at FXCM. There's nothing any of us could do about that. I'm sorry it happened to you. Okay, well, you got to call them. Bank of America. Okay, thank you, Mauricio. Well, yesterday, Blake's looking for 105. I know Fib Stalker's still negative, looking for a place to short. Anise, where do you live? Are you here in the U.S.? Yeah. Are you in the U.S.? Sorry, Jax. Well, wait till you hear our interview. You won't want to listen to what Peter Temple has to say. Because if you're outside the U.S., try FX Pro. Any other looks or views from the house today? You're in Dubai? Okay, we'll give FX Pro a shot. I think you could try and buy the euro right here with about a 50 pip stop. I'm not doing it. I'm pretty loaded up on this stuff here. So FX Pro, check them out. They should be on the page here, on the LAR page. Hi, Pipper. Reasonable. You're asking about the spreads. Check it out. How are you, Pipper? What are you thinking in here? Hello, Peter. How are you? I just think there's decent divergence for a pop, maybe. And there still could be one more high in the euro pound here, Jax. I think we have a potential 3 drive coming in euro pound, which tells me to favor the long side of euro over the pound, right? Because I think we're going to make a run at 80. We can make a run at 80 in euro pound. See this? 1, 2, maybe we get one more rally here up towards 80. So if I think euro pound's going higher, I'm going to favor longs in euro over cable. You don't have to agree with me, but give me a Y if you get it. When I have a bullish bias in euro pound, my preferred long is the euro. My preferred short is the pound. Give me a Y if you get that. Even if you don't trade euro pound, it's a very important pair for trade selection between the two. Give me a Y if you get it. I've been teaching this here for 2.5 years. Okay. Well, you know, my work is saying that momentum, downside momentum on the 1 hour has slowed pretty good. I hate when it does this. We're not confirming the lows anymore with the RSI platform. So only 4 of you understand the value of euro pound. Darn it. You mean we're going to have Brexit news? Maybe on FOMC what? On the minutes? No, I lost the euro chart. Yeah. You see it, Sinatra. See this? See this? Confirm low. Here was your first divergence, and here's your second divergence. Oh, over 114? Okay. I certainly wouldn't short it here. When we had the 3 drive formation up here last week, my target was about 1080, 111, this line right here. So we're almost at initial targets. Doesn't mean you buy it, but sure means I don't think I'd be short down here. We'll go through this. Oh my God. Everyone doing okay? I'm a creature of habit. Sinatra says hidden divergence. How could it be hidden if you see it? Sinatra, how could it be hidden if you see it? Just a joke. It's just a joke. So we've only seen a few charts. We've only seen a few charts today. So the crude failed there. Could probably fade this opening in the S&Ps. I don't know what to do. Guppy looks like we could have some kind of ABC in the Guppy back to 67 maybe. Natural gas at 177. 177. Okay. Where's it at now? $2. Yeah, that's pretty ugly candle. Okay. So if crude fails, I think this time S&Ps will correct. They're due to correct this 2-day pop, 3-day pop. I don't know what you want to call it. Who loves lard? Give me a Y. There's mine. Oh, very good, Sinatra. Thank you for your tutorial. The sharing of knowledge live in action here. Look at all this love. At least 7 people. It's stuttering. Oh, it's your internet connection. Refresh. Refresh, Jay. Still think Aussie's headed down to the 69 handle level. My view on Aussie. Here's the opening bell in equities. Probably a fade. Well, if crude's rolling over, Canada should be getting a pop here. Yeah, maybe up to 41. Your audio is breaking up too, Pipper? Okay. So, okay. So Kiwi looks lower too. Everyone thank Alien for his look here on the Kiwi. Broken up trend, rallied right back to it. Thank you, Alien. Thank you, brother. How are you today, Roland? Ray, how are you? Ibby, how's it going? How are you, Pan? Peter, welcome back. Tomas, welcome to LAR. Everyone, welcome, Tomas. I believe first time I've seen your handle. W's in the house. Tozen's here. Hi, Ibby. Nice to meet you. Everyone, welcome, Ibby. Saw your handle yesterday, I believe. So it always has been and continues to be my mission to build up and edify traders every day. I think that we accomplish it every day. I know that you guys build up and edify me as well as the guests that I bring in. So if you agree with the mission being accomplished, give me a Y. Every day, it's my mission to build up and edify traders. Been doing it for over 600 shows. Think we've helped a lot of people in here. There's all different kinds of shows, programming here, Ibby. There's programming almost all day long and evening. My personal schedule is from 9 a.m. to 11 a.m. Eastern time. 2 hours I'm here. And if you go to the LAR page, maybe you could post it, Adinda. The LAR page has the schedule of all the different content that you could view on FX Street's YouTube channel. So they have a schedule there. Could you post a LAR link for Ibby, please? I'm on the Tico page. There you go. Thank you, Adinda. So just go there and bookmark it, Ibby, because there's a lot of great content. Yohei Elam, Giuseppe Bazil, Little Fish was on. Tip TV is on every day. A lot of great content. on FX Street's YouTube channel. Thank you, Adinda. Looks like Alien's going to be right. You know, we got this one rally, and then now Alien's looking for $20 crude. I think it's going to be right. Nice little 3-driver in the pound here. Nice 3-drive in the pound. Check it out. One, two, three. Everyone see this? 1, 2, 3. So why not a recovery back to 350 to 144 from here in cable? The possibility. I'm a seller up here between 370 and 4. Sure. Here's drive 1, confirm low. Here's drive 2, not confirmed. Here's drive 3, second non-confirmation. Or if you want a classic, last week we had one in Euro USD. Here's a pretty classic example. I don't know why this keeps acting up like this. Euro pound looks like it's trying. See this? RTEM. Here's drive 1, confirmed high, right here. Here's drive 2, non-confirmation. Here's drive 3, and then boom, 3 drives to a top, take a snapshot. Hi, Flash. They call me Mr. 3 Drive. Anyone know why they call me Mr. 3 Drive? In this example, prices makes a new high, but the RSI doesn't. And the reverse, and the reverse. Anyone know why they call me Mr. 3 Drive? Any guesses? I just figured out why I'm called Mr. 3 Drive. Yeah, there's Alien's look on the pound recovery. Yeah. Back to 430 maybe. Thank you, Alien. So any guesses why I'm known as Mr. 3 Drive? I've had Rob here many times, yeah. He canceled the last time I scheduled him, so I haven't re-invited him. No. Closer. Closer. I take two mulligans. I take two mulligans. It takes me 3 drives to get off on the fairway. I thought you would have guessed that, Jax. I take two mulligans. Don't you wish you could do that in the market? Take a few mulligans every once in a while? Yeah, that's a little bit too much. No, it takes me 3 drives to get on the fairway. Those are Michelob's. Yeah. So Euro's trying here too. Pound looks a little better. Thank you, Alien. I'm going to take a quick break, everybody. I'll be back in 5. Stick around for Peter Temple. I have a feeling it's going to be a very compelling interview with Peter. So Pound's trying to come out of here. Nice tail already. Nice tail already in the Pound. And I'll be back in 5. Hope my ideas and looks have helped you out along with Aliens. And I don't know who else showed a chart today besides Alien. I think that he is it. Good hunting, everybody. I'll be back in 5. I'm back. Everyone doing all right? I'm back. Told you it would only be 5. Not anymore, Jax. I gave up golf. Yes, I used to drink on the golf course. It was too aggravating to me. I played Army golf. Can you guys give me a Y if you could hear me? Everything's still good in here? Give me a Y if you could hear me. Pound's trying to reverse here. I have a headache. Artem could hear me. All right. Okay. Any other charts to share prior to our interview? Gold's trying to rally. Crude's holding. Yeah. Yeah, I was like that too. You know why Jewish guys make lousy golfers? Jax, you know why? They have a slice in their putts. Euro's trying to reverse too. Diverging. Or as Sinatra would say, hidden divergence. You never heard that one? I knew you'd appreciate that. Excuse me for eating my bagel on air. It's gone now. Use less leverage when you trade FX market. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Thank you, Abel. Almost have a positive candle in the euro. Euro's acting better than the pound. That's because EEG looks better. Hi, Mystic. Come on, it can't be your favorite song. Mexican peso. Pretty good proxy for oil. Peaked up here. Where's Rick? You like that? The song for that is use max leverage when you trade FX markets. Turn $100 into 10K. Swing for the fences and use max leverage. But if you're wrong for a minute, your money will go away. Use max leverage to turn $100 into 10K. You'll swing and then you'll miss, and your money will go away. So don't tell me that I didn't warn you that you'll blow up your account and you'll be very blue. Don't use max leverage. That's the opposite. Use max leverage to turn $100 into 10K. Swing for the fences and watch your money go away. How do I know that? I've taken a couple of big cuts before in my trading career. It is. Good for you, Anisa. You're there. It's worth plenty. It's worth plenty, Jax. Don't sell yourself short. You're a champion. Who thinks Jax is a champion? Give me a what? I do. Back to 11 and a half. Okay. Thank you, Jax. Everyone thank Jax for his look in the euro. Got some different levels there to pay attention to. Take a picture. Thank you, Jax. Don't trade your mortgage money, Tomas. Don't trade your rent money. Don't trade your mortgage money. Don't trade your retirement money. Capiche? Don't trade scared money. Stick around for Peter Temple. Definitely don't do that. Don't trade your beer money. I concur. That's smart, Tomas. You buy your beers only on the weekend, Ollie? You don't drink during the week? Okay. Stick around for Peter Temple. Good morning. Is that you, Tosin? Is this Tosin's chart? If we ever take this out, the euro's in big trouble. Nice look. Nice euro look. Good morning. Thank you. Everyone thank good morning. I think it's Tosin, though. Non-drinker. It's Flash. Okay. Thank you, Flash. Yeah, I'm not much of a drinker either. It gives me headaches. Thank you, Flash. Everyone thank Flash for his euro look. Don't fade Flash, or you'll run out of cash. Don't fade Flash, or you'll run out of cash. He's just showing important levels. It's not a recommendation, is it, Flash? Yeah. Stick around for Peter Temple at Praise Maestro, World Cycles Institute. There's some big picture stuff we're going to hear. Here's some big picture stuff from Peter. Big Brother, yeah. Big Brother's trying to get Apple to capitulate to give up the encryption code. Tim Cook is fighting it. And it looks like he bought it, the Kiwi. Thank you, Jax. Everyone thank Jax for the Kiwi look here. That was yesterday. Thank you, Jax. Everyone doing okay? Peter Temple should be here shortly. I think you want to be here for this interview, Alien. See you later. Everyone thank Alien for his great looks today. In the pound and Kiwi, everything. Thank you, Alien. Have a good one, buddy. Okay, buddy. All right, buddy. If you love Alien, give me a Y. If you love him, give me a Y. I love Alien. He's my favorite extraterrestrial in the whole universe. Love you, buddy. Stick around for Peter Temple at Prez Maestro. He gets 2 Ys from you. Look at all the love you're getting, Alien. Make you feel good? Good to be loved. Good to be loved, guys. Anyone love that Dale Pinker guy? Give me a Y if you do. I love me. Who? Little old me. Little old me, guys. Little old Forex stop hunter. Little Dale Pinkard. Me. Do you love me? Do you love me? Do you love me? Do you love me? If you love me, give me a Y right now. Standing by for Peter Temple. Everyone doing all right? Thank you, guys. Back at you. Respect. Stick around for Peter Temple. Just waiting to hear Tito. Wow, thank you, Mystic. That's a pretty powerful combo, huh? Thank you, Mystic. Who agrees with Mystic that there's compelling information here and yet we still have a good time? So it's a unusual combination to be able to give compelling information and ideas and yet at the same time have fun. Many people that do this are too serious. I think Peter has arrived. Yes, he has. Hi, Peter.
Hey, Dale.
So nice to meet you, Pete. Nice to meet you. And I see you're in your spaceship there.
I am in my spaceship.
Yeah, ground control to Major Tom, as the past great David Bowie would say. It's really a great time to have someone like you here with us to edify us, Peter. I've been telling the community about you that I tweeted out a grizzly bear along with the interview because I know those are some of your views, and you're a renowned futurist. And what would be interesting to me, Peter, would be for you to get in a time machine and not be a futurist for a few minutes, but tell us about the beginnings of your journey into the markets and studying guys like Elliott, Dewey, and Wheeler. How did it begin for you? At what stage in your life were you always interested in the markets? And from what I understand, you're pretty much self-taught. Maybe you didn't have mentors. You were hungry for this knowledge. So tell us about the beginning of your career.
How's my audio, Dale? Am I okay? Do I need a headset?
No, yeah, the volume's clean.
Okay, great.
The picture's good.
All right, so I'm self-taught, and I got involved. I'm 66 years old, so it was about probably 12 years ago. I got involved in the market. I just had this interest for it. It's one of these games that you kind of want to get to know, and I consider it the ultimate game. I mean, if you can do well at the market, well, I can't say you can do well at everything, but
maybe you don't have to do well at anything else. Maybe the key, if you do well in the market, you don't need to do well at anything else.
That's right. Well, that's right. You don't need to do well. So I got involved in it, and I got involved, I guess, with Trend Fund. Who's the guy that made $1 million during the 2001 drop, I guess, and he was on the street or something. He learned how to trade, and he opened up this service. And so I started learning about that and got into a lot of patterns and things. And I thought, you know, there's got to be something more to this in terms of how the market moves, because I keep seeing these patterns over and over and over again. And what's the bigger picture? And then I found Elliott Wave International and started to get involved in their stuff. Yeah, Prechter's books. And I got Prechter's book, and I started getting involved with them, and I was on their service. And I hate to say this, but quite frankly, after a while, I got ticked off. Because...
Well, he's been a perma bear. He's been a perma bear for a long time.
Yeah, but
Hasn't.
he has been, but I also found that their accounts started to get a little questionable, and I started thinking I was in some ways better. So I just kind of determined that I was going to figure this thing out, and so I just spent I've done my 20,000 hours in the market, and I just got a lot better at it. And the thing that really, as a trader, when you talk to technical analysts, the thing that makes me crazy, and I'm a speaker, they always say you should talk about what makes you crazy, is that they will say either the market's going up or it's going down. Well, for a trader, that doesn't...
I call that, Peter, I call that CNBC analysis, where someone will say, the market could rally unless it fails, but if it fails and rebounds, it could go higher.
Well, exactly. I mean, they would come up with 2 counts, and you know, as a trader, I mean, that doesn't do you any good. How do you trade 2 counts? It's very difficult. So I just determined that if I got a service up and going, that I would pick a direction and live or die by that, and explain to people who, because the other thing that made me crazy is they didn't really give that much of an explanation, and Elliott wave is very complicated. And so as my background as a communicator, I've been a television producer, writer, director for most of my life, and in the ad business and that sort of thing. I thought that I could provide a service where I could teach people how the market moved. So that's how I got into Elliott wave. But let me tell you how I got off on this tangent into cycles and Dewey and all of these different Wheeler. I was looking at somewhere on the internet, and I picked up a news service somewhere which was showed the 1974. It showed about a 10-year period, and all of the oh God, I can't think of the, you know, Western U.S. You get the not cyclones, but what are the
hurricane?
Well, hurricane, but the ones that are circular that touch ground. The words escape.
Tornadoes.
Tornadoes. And it showed this graph of the years in the 70s, and in 1974, it went right off the map. I mean, the bar went right through the ceiling, and I thought, 1974, well, that was the bottom of the recession, and that's what we Elliott wavers look at, as we call it wave number 4, the big wave number 4. And I thought, that's interesting. So you had really extreme climate in 1974, and I thought, well, you had extreme climate in the 30s as well, and I thought, that's really interesting. I actually have some charts with me today, if you want to get into this a little further. And so I found Dr. Raymond Wheeler and his work, and Dr. Raymond Wheeler was a psychologist, a PhD psychologist at the University of Kansas in sort of the 40s, 50s, and 60s, and he got interested in the climate and wanted to use psychology involved with climate. And so he spent most of his life going back to 600 AD, or 600 BC actually, and he analyzed all of the climate, both the rainfall and the temperatures, back to those dates, and he created a book which I've actually found, and I'm going to go down to New York and see. It's in Baruch University, Baruch College down in New York City. But it's called The Big Book, and it's like 7.5 feet wide. It's 2,000 to 3,000 pages. And he recorded all of this data, and he went back and did all the cycles of the climate, the weather, you know, over that period, and he put in all the major events right back to 600 AD, and he found these patterns. And the patterns are cycles, and they revolve, and so this is probably the most comprehensive look at climate and events over 20 centuries that there is on Earth. And so I got really interested in this. But then I found, when I got into cycles, I found Dewey, and then you get into Krzyzewski and his solar cycles, and all of these luminaries of the 20s, 30s, 40s, 50s, and 60s came up with these cycles independently.
The only one I haven't heard you mention who was kind of a hero of mine was W.D. Gann. You know, well, I live by Gann's statement that if you don't learn how to change your mind, you won't have any change left, because I used to become attached to my biases. And I think it's a very important thing. But Gann believed that time was more important than price. Did you look at him?
Well, I mean, he's pretty deep. And so I have, because I was involved with the the Foundation for the Study of Cycles for a short period a couple of years ago, and they are very sort of into GAN. And I've got a couple of his books, but I haven't got into it in any depth. I'd be a novice in terms of GAN. I'm fascinated by it, but it seems to me, and I want to get into doing a little bit of math, that there's a Fibonacci element to that, and in its timing, and I want to get into that a little bit more and understand how that works with the whole Elliott wave Fibonacci thing, because I think there are links there.
Yeah, because a lot of people use Fibonacci for price, but Fibonacci could also be used for time.
Exactly.
Right. You know, so you could kind of have an idea how long or how sustained a move could be based upon if it is a turn and if it's a percentage of time from the previous move. So
yes.
It's interesting. So I could tell that you really delved in deeply, and you know, you can share your screens. They look good as a backdrop, but if you want to share your screens, because I know you prepared a few things for us, you go to the upper left-hand corner. There's put your cursor up there. You'll see a green box with an arrow.
Oh yeah.
And if you click that, then a bunch of your different desktops will show up, and then you click that and click Start, and we'll have a look. I see some things behind my charts.
Okay. So I was trying to get
there. There you go.
I got a whole bunch of stuff.
So we're looking at the S&P here.
Actually, this is this morning's chart. And
okay.
This is the ES. So this is futures. Right. And this is a great place. Why don't we start with today? Because I was thinking about what I could talk about. I can go back and talk about the bigger picture with sort of climate. And it's interesting that climate and the Dow move together. And when it gets colder and drier, the Dow starts to go into a recession. So I could talk a little bit about that. I got charts about these things that go back thousands of years. But we can start.
I'd also like you, because I forget things, and that may be why I'm interrupting you. I know that from your website, you talk about natural cycles' influence on health. And on your website, worldcyclesinstitute.com, Zika is becoming prevalent. And during times of financial stress, which a lot of people are going through, that's why, in my belief, the anger in the U.S., looking at people like Trump and Bernie Sanders, and politically a lot of extreme right and left-wing leaders coming to the forefront. And our immune systems become stressed out because we're trying to, pay the rent or everything else, and we become more vulnerable to disease. And I don't know about you, I mentioned it to our community today. I was watching Jeb Bush in South Carolina, and he was talking about how important it was for the president or commander-in-chief to have a steady hand. And he was talking about that potentially. He brought up the word pandemic, okay, and it's the first time I've heard that in this silly season, in this political season. It makes me think that there are war cycles. I talk to guys like Martin Armstrong, and pandemic cycles, and with Zika hitting the front pages, I'm wondering if your view on what could happen to markets after this short-term look, that we should be preparing for something like that as well, which is something that, besides spraying mosquitoes, what can you do besides living in a bubble? So go ahead.
So let's back up then and go back 10,000 years, and this is exactly where I was going to start. It was looking some of these larger cycles, because this goes back to the work of Wheeler, who I think was extraordinary in the work that he did. And Wheeler was the guy that went back 20 centuries to 600 BC with climate. And he determined that there are really 4 major cycles, very much like the annual climate. So you've got summer, winter, fall, and spring. And they work very much like that like that, where you'd have those would be a quarter of a year. There's also 25-year cycles, which each one of those would be 25 years. Then there's 100-year cycles. There's 172-year cycles, which I'm very interested in, as I think that's one of the keys. 515. So these are to some extent harmonic, in that 3 times 172 you get to 515, and then you get the 1500-year cycle. And the 1500-year cycle, he believed, was changes in civilizations. And
okay, so are we in the time zone where you see these smaller cycles and larger macro cycles converging into the same time frame?
Yes, because the larger cycles take over. So we just passed one of the studies I've done, interestingly enough, is getting into the planets and how they figure in these cycles, because it all comes from the planets. In fact, Fibonacci comes from the planets, because the ratio of the planets to each other is 0.618. So it's interesting that that's where that all comes from. So we're influenced by the planets. So 172 years being one of the key Wheeler depression cycles. I found out that, interestingly enough, the conjunction of Uranus and Neptune happens every 171.4 years. Religiously, of course, it doesn't change. And 14 years after that conjunction, we always have a crash. So you can go back to 2007, which we had a crash. And I see that as the beginning of the crash. We had the Fed get involved and do their handiwork, and of course we haven't finished the crash, and we're going to finish the crash very shortly. But you go back 14 years to 1993, and that was the conjunction of Neptune and Uranus. You go back to 1835, which was the largest depression in the U.S. to that time. That was 172 years before 2007. You go back to England, 1663, that was 172 years before 1835, and that was the largest depression in London. The next year, 1664, they had the bubonic plague, and the next year, 1665, they had the fire of London, which burned down London. So, you know, you look at these things, and this goes right back through history. Stephen Pitts, I don't know if you've heard of him. He did a series of books, I don't have it in front of me, or a couple of books, one of them called The Universal Cycle Theory, and he went back and again, sort of the same, well, he went right back through history to the beginning of time and figured out the cycles, and he's done the probabilities of them, and the probabilities are, most of them come to within 1%, and he figured out that they're he really backed up the work of Dewey and some of these others. He figured they're harmonic, and that you've got a 7-year, you've got a 19-year, that's the real estate cycle, 18 and a half, 19 years. You've got the Kondratiev cycle, which is 54 to 57 years. 3 times that is the 172 Wheeler cycle, 72-year Wheeler cycle. Then you get the 515-year Wheeler cycle as well, and then you get up into the 1500-year. And so these multiplying by 3 gives you the next cycle. So getting back to your question, are a lot of them aligned? Yes, the 172-year cycle is aligned with a lot of the lower ones, and so we're in this big down cycle right now. And Wheeler said, when you get into this colder, we're getting colder and drier, and that's where the climate is. So this.
Well, that sure flies in the face of global warming. Yeah,
it does. Here's a little chart here that shows you, going back to 9000 BC, you can see how climate, and this is not disputed, any of this, you can see how the cycles take shape here. You can go to Egypt, and it's interesting that all of the warm periods were the heights of civilizations. So you can go to ancient Egypt, warm, ancient Egypt, the New Kingdom, ancient Greece, Roman Empire. I think this is actually, these two were pretty close together. Medieval warm period and the Mayan peak, and then our modern warm. And here we are looking at a cold spell coming up, like these dark ages in the Maunder Minimum, Little Ice Age. And so we're expecting it to get colder and drier. And in fact, you get into people that study, I'm tired, I'm trying to think of the name, study the universe and planets, and they're saying that because the solar maximums are getting very much smaller,
Oh yeah,
There's
yeah. John Hampton is very big. I read some of his stuff on
yes,
solar
yeah.
cycles.
John is into this as well, and
Yeah.
but the solar maxims are getting very much smaller now, and we think we're going into a mini ice age again. That's the way things are looking.
When was that little ice age?
That was in the 1600s.
Okay.
In fact, the bottom of that was 1663. Interestingly enough, which was the London thing I just talked about.
Okay. All
Yeah.
right. So
Let's
this
go.
definitely flies in the face of global warming. Do you think this global warming agreement, what's the agenda there if we're heading into a cooler, drier period? Is it a political agenda to take control of the economy or make some type of switch from a carbon economy to a different, green economy, and that's why this agenda is being pushed? It can't be ignorance of the facts, because if you know this, you're not the only one. What do you think is behind this global warming agenda?
Well, you've got a lot of money behind it, and if you go back to, there's a guy that I never met.
I should have known. It's always about money.
It's
Yeah.
always about money. Maurice
Yeah.
Strong, who died recently, has got some Canadian roots. I guess he was in China mostly the last few years, but he was very involved in the background in the UN. And Maurice Strong was part of the Club of Rome, and that is sort of a group. I've done a little bit of reading on it, but it was a group that really believed he had a very socialistic take on the world, and he wanted to limit the Western civilizations in terms of their ability to grow, so that it would sort of even out the rest of the world, and so that you would get he sort of was in this for a better world, wanted to even things out so that you it was a kind of a socialistic way of looking at the world as a whole. And so he was sort of behind the climate change thing, and I know that Al Gore and his group got involved with it. His background, of course, is the
well, that's after Al Gore invented the internet. He needed a new project.
well, yeah, they needed something else. So there's all of that background to it, and it is purely because it makes no sense if you look at this from a long-term perspective. And here's my climate. This is data from the Greenland ice cores that was in the 1990s. So this shows you the peaks every 1,500 years. So you go back to ancient Egypt, and this is actual data that's taken from ice samples in terms of the temperature. And so you can see the Greece Dark Ages here, and you can see classical Greece starting up here, and then Rome took over Greece, and there was the height of Rome here, and then it started to fall apart and Rome burns. You can see down here as it got colder, and so then you get Mayan peak, and then you get into the Dark Ages where it was very cold and dry, and the Vikings rose when it got warmer here, and then you get the medieval warm period, and then you get the Little Ice Age, and it's been that during the British and Spanish empires and those sorts of things. And now we're at the U.S. is the top, but we're at another peak now. And so
was that peak coincidentally in 2000? Just curious, because it looks like we've come off the peak. Was that around 2000?
Yes. Well, it's 19. If you talk about the climate people, they say 1998 was the warmest year, and so we've been on this plateau. And it's interesting when you put that. I've got a video actually on my site that equates the climate over the past 100 years with the Dow. And so you can see that from 2000, of course, we had a peak, and then we've been sort of up and down in 7-year increments ever since.
Yes.
And so we're at this point of turning down.
The Shemitah.
Yeah, that's exactly right. 7 years.
So, Peter, let's switch gears to the Dow then. Great macro view, and we could probably include the macro. But let's get to your bearish case in stock indexes. If you want to show your short-term work, that's fine too. You know, we're getting this fair market rally, double bottom in the S&Ps from 1800. I just have one question because I give it some probability. I keep an open mind. And, you know, I was long VIX instruments going into this year, and the VIX kind of underperformed the break in the market in my view. And right now, my belief in the markets, Peter, is that Mr. Market's a real mean guy, and he will shake out as many participants as possible before the move. people are looking for occurs, then most likely without them because they've been busted out trying it. And do you think there's any possibility that we could trip up the bears and have one more high in the indexes with even more divergence and non-confirmations and breadth, et cetera, et cetera? Or are you pretty convinced that was it? Because, you know, it gave people almost a year to get short the market, and markets usually don't give people a lot of time to think about it. And you had lots of times and many opportunities to short the S&Ps at 2100 and the Dow at 18,000, 17,800. And I'm wondering if there's any count that could throw off the bears so that maybe we get back above 2100 and everyone says, see, it was just another break to buy and we have an all clear, and then the markets fall apart later in the year.
Well, you know, it's interesting. I'm getting close to something that's a little more numbered here because these live charts tend to move things around depending on the view. If we were to go back to the daily, or actually the weekly maybe, on this, and you see we've come up from 2008 here. Let me actually go back to the Dow. Let's just take one quick little look at the Dow on an 8 or 9 day. And you can sort of, you know, just as a little bit of history. So you can see 2008 here at the top, and we came down in what we think 5 waves, which would be the beginning of a trend. And then, of course, the Fed got involved right down here at the bottom, and we started to go up. Now, to an Elliott waiver, this is 3 waves. So we've gone up in an A, B, C here, which means we have to retrace. So you can see this would be the A. If you kind of squint your eyes, if you're not used to Elliott wave, you can see that this is not 5. There's no big second wave here and then goes up in a 3, 4, 5. We've gone up in 3 waves, and that will never change. So this has to go.
Even though we took out the highs by 4,000 points, that the top in 07 was an A down to 6,000, and this is an irregular B up to the top and with a C to follow?
Yeah. Yeah, it is. It's kind of an irregular, if you want to put it in those terms, a regular B, but it's certainly in 3 waves. There's no way you can say that this is in 5 waves. Now there are people, Dale, that are expecting us to have a 5th wave, and you know, I was looking at that too. And we're going to go. I'll go in a little tighter here, get back to sort of where I was maybe in the S&P because I've got more markings on that. And we get into a 2-hour chart here, or 4-hour chart maybe, of the S&P, which takes us from the top here, and we had this big drop, which I have got labeled as a 1st wave, and some people would argue with me that that's a 4th wave, and I'm not going to get into the finer points of that, but I'm still thinking that this is a 1st wave here. And then we had this interesting A, B, C up, which took us to, you know, at the top of November the 3rd was this peak here. And we look at this in Elliott wave perspective and say this was a flat. So it is 3 waves up, and here you get into your 3, squint your eyes, A, B, C, which told me right off the bat that this was not going to a new high, because a new high, if you're in a motive wave, ending waves are in 5 waves. So this tells me that because Elliott wave says that all of the subwaves also have to be motive, they have to be in 5 waves. This tells me that this wave was not going to a new high. So it was going to be what I now classify as a 2nd wave. But a flat is in 3 waves, 3 waves, and 5 waves. Well, what happened here, we had a 4th wave, and then we had this wave, which I was fully expecting to get up to the top here, and it didn't get to the top. And
so that's a failed, they call that what, a failed or truncated?
I think it hasn't been proven yet. This market is, you know, you're right, this market will do everything it can to take as much money away from as many people as it can. That's why I often say to people, don't trade what you think, trade what you see, because, you know, what you think is not often the case.
So wouldn't that do it? Wouldn't that do it? One more push above that truncated failed rally and your 2-wave, burn all the bears, or at least people that have been liquidating and puking their stocks down here because we have as much fear in the market sentiment-wise as we did in March of '09.
Yeah.
And one more rally, people that are liquidating will get back in. So, I mean, that's part of my rationale. I'm not a great E-waver, but I could also see that your case too, that we've finished 3, and wave 4s can retrace pretty good, so that maybe we're going to 1970, 1980, 61.8 back before we finish this initial wave to the downside. Is that your view?
Well, let me take you. Yeah, let me take you through a little bit more of my thinking here. Is that I do believe this is a truncated wave because I can look at this wave and see the 5 waves within it. It just was short, and then we had this wave down, which because it was of the truncation is actually not a motive wave. So you would expect that if we're in the big drop, that we're going to get into a set of motive waves. So you would have 1 wave down, which would again have 5 waves within it. You'd have 3 up. You'd have 5 waves down, which we have here.
Yes. Yeah.
You would have a 4th wave, and you would go down to a 5th. Well, this wave here is not long enough by Elliott wave standards to make this whole set work. And so,
but it did take out the stops. Okay, it took out the stops from the 2014 October low, and took out the stops of the initial break in of the decline. So
depending on the index, I guess. The problem I have, I was just discussing this yesterday, is because last week what happened is that the S&P came down to a new low right here, and that sort of completed this part of the wave. But the Dow did not. It didn't come down to a new low. So and neither did the NASDAQ. So we have this interesting situation where either this is a very strange first wave, or we're still completing the first wave. And so that got back to where I was going to start this morning. I on Saturday did a video that I expected, and let me go in a little bit, let's go in to about 30 minutes here, and let me put on some numbers and things. So we had maybe the hourly. So this is our first wave down in the S&P on an hourly chart. And so you can see that we had this kind of interesting first wave here that is either complete, either truncated, or is a corrective wave, which is an issue. So that says to me, well, gee, it could go either way. There's nothing conclusive here. I've marked it a 1 anyway. And then I called this as a second wave on January 31st, but I didn't know how far it was going down. I said, I know we're going down, but I don't know whether this is going to come back up and hit this top, or we're going to go down. And sure enough, we went down, and we've done what looks like kind of a scrunched third wave here, and then we've got this ABC into a 4th. Now here's the problem, Dale, when you get down into this 5th wave, which would, and you got to realize an Elliott wave, once you have 5 waves down and their motive, that determines a new trend.
Right.
So we're on the verge of a trend, but we're going back and forth. So I've got this problem with the truncation to be able to say, yeah, for sure, this is first wave down. And I've got this interesting little contraption here, which is an ending diagonal. So it's overlapping. Sure, there's 5 waves, but they're overlapping. The 4th wave overlaps into the area of the 1st, which is a very hard and fast Elliott wave rule.
Ending diagonals, that's what the gold bottomed on before the big rally.
Yes, that's exactly right. And they're all over the market. I've never seen so many ending diagonals in my life. In fact, this wave here this morning, which I was expecting, I thought this was going to be a second wave and they were going down to a new low. I did a video on Saturday that said that was what was happening. Yesterday, we went up to exactly 62% in 3 of the indexes, the NYSE and the Dow and the S&P, but the NASDAQ did not. Overnight, the futures all went up to 62%. So now we have the potential of this being a second wave. I thought this was going to be a second wave and going down from here. I thought this was going to be an ABC doing a second wave. So we've got options here, Dale, and it's really tough right now to figure out what this market is doing. And
when in doubt, be out, and just wait for your big picture to develop.
That's right.
Let's assume that with everything you said, macro-wise, is true, regardless of whether there's one more jiggle to new highs, or we fail here, or we fail at 1980 or 2000 or wherever. Give us your big picture of where you think the Dow or the S&Ps can go, and I believe that you most likely think, I'm just being Noster Pinker here, that we're going to challenge and take out the 2000 March 2009 low.
And in fact, if we go looking at this little baby here, this is the Dow. Let me just get rid of some of this stuff.
Wow,
here.
what a nice megaphone pattern up there.
Yeah, isn't that? And so this is a log scale, and it goes back to
Harry Dent talks about the megaphone, and 3 drives to a top as well.
So here's 1929, 1930. So this is wave number 2. Then you get into this 3. Then you have 4, and then we got this great big long 5 with again an ending This would be an expanding ending diagonal at the top, is what I'm classifying this as. And here we come down. Oh, here's the target. Right here is we would go down to the previous 4th, and the previous 4th in 1974, which is what I was talking about, is at 549 points, or 500 around that 550. So that's our target for the Dow.
Okay.
I'll let that sit for a minute.
Okay.
Yes, 500,000. So
Okay.
it's that kind of collapse is what I think we're going to do. I mean, this is a bubble. This is the largest bubble in history.
So let me ask you this: where do you reside? Are you in Canada, Peter?
Yeah, I'm in the until a year ago the oil capital of Canada.
Alberta. Okay, because I want to maybe touch on our bailiwick and see how the dollar fits into this, because there's 2 schools of thought that as U.S. dollar denominated assets like equities go south, it's also going to be a huge bear market in the dollar. And then I've also interviewed people who think that one of the reasons the market's going to cave is because of the deflationary forces of a stronger dollar. Curious as to where you come down on that, because my belief is currency is a linchpin to all of this. Stock markets are small in comparison to bond markets, and global bond markets are small in comparison to global currency markets. So really, I think they're the tail that wags the dog. So do you have a dollar view during this scenario?
Very much so. And here's something. I pulled up this graph. I actually sent this to Bob Prechter, because Bob Prechter a number of years ago came up with all the same market theory. I don't know if you've heard that, but he said at some point the market is going to all move together, and in fact it's actually doing that. And I sent him this chart I sent this I think in October of last year. So at the bottom here we've got the euro US dollar, and up at the top here we've got the NYSE. And actually I have one more chart somewhere I couldn't find this morning with the dollar, and this is the euro US dollar reversed, so it's upside down. And so the dollar would look like this. And so what I'm saying and I'm seeing is that the equities are moving with the dollar right now, which is really interesting. And so
weak dollar, weak equities, strong dollar, strong equities.
And euro in reverse.
Okay.
So what we're seeing in this kind of blue Prechter way, I said, what I'm seeing, and I could take you through a chart of the euro and the dollar, but I believe the dollar is going down short term, because I think this is going to change. So I think as the equities come down, the dollar is going to come down. But I think that, and if you go back to a chart of 1929, there was a sort of plateau after you get the first set of waves that come down. You hit this big 4th wave that'll sit there for about almost a year. And that was really the start of the spiraling deflation. And I just, in my mind, the theory I have is that the deflation, when it takes hold, will change everything, and the dollar will then head up. So I believe the dollar is going up longer term, but it has to, the problem we've got is we've had the dollar do one wave up. Now it has to correct 62%. So I'm expecting to see the dollar go down to at least a 62% correction. And I'm seeing that right now in all the other currencies. The Canadian dollar, for example, which I've been watching and trade occasionally, is reversing now, and that should go up to almost parity again before it starts down. And the same thing with the Australian dollar. Everything is moving in tandem, and the euro as well. I see the euro. I don't know if it'll go up 62%, but the euro, and this interesting thing about Fibonacci, did a corrective wave. Maybe I can even get to it here. Euro.
So let me get this straight. So you think that USD CAD is going to take out the recent highs in USD CAD was about 147. You're looking for initially USD CAD to come down towards 100, then head way up?
Yeah. So, yeah. So
okay,
here we...
So that would probably build the case for a huge bear market rally in energy. Or else I'm misunderstanding.
It might, because we, in energy, and I could show you oil here, I see this as being another ending diagonal. This is X oil right here. So I think we're going to get $10 before, because these usually do throwovers. I see one more wave up here and another wave down, and that should finish an ending diagonal. And yes, we should probably get a rise in energy, and it should be a sharp rise. I can't tell you timing, but that would be.
But not until we finish down under $20.
Right.
Is that what you're saying?
I think we're going to get into the teens and maybe $10.
Okay. You know, Peter, I'm very sorry that I have to abbreviate this webinar. I didn't know we had someone on deck behind me, but perhaps we could continue this at another time. You have a quick view on gold. That was really a tremendous move, caught a lot of people off guard, and we could wrap it with that. And then I also want to tell people, if they're interested in following you, your Twitter handle is @PresMaestro, and they could go to your website, www.worldcyclesinstitute.com. Is that correct?
Right. That's right, and there's actually a free blog on there with the market info in it. I'm just setting up a forum for the longer term. So.
Okay. Yeah, you know, Peter, we probably could have talked for about 6 hours today.
Yeah, we could have gone on and on. It's interesting talking to you, Dale, and with your background, it's kind of cool. Let me just, gold quickly. Gold has come down in the first A wave, and so it's heading up. And this, to me, has been pretty obvious, and we've known this for a long time. It should head up to about 16. Oh, this is GLD. Let me get my gold. It should head up to $1,600 here in a B wave.
61.8 back, and then head down when deflation and the dollar kick in again.
Yeah, and it's to 750, and boy, that's when I'm buying, and then it's heading up. Then gold is the long term. Well, gold is money. We'll eventually have to get to that.
Peter, thank you so much for joining us today. I'm so glad I found you on Twitter. Please keep in touch with me, and I'd love to have you back again as things begin to unfold. And again, I appreciate the work that you shared with us today and the macro views, and I think it's going to be very important for people to follow Peter's work in the upcoming years and days ahead. So thanks again, Peter. I hope you don't mind. I'm going to call you from now on my only, you know, we could maybe have a bromance. I have bromances with people whose work I respect, but I'm going to call you my trading warrior brother. That okay with you?
Yeah, I think it's a fascinating time to be alive, and it's interesting to see what's happening. I mean, the learning part of this is just extraordinary. So yeah, take care. It was fun to do this.
Thank you so much, Peter. Good hunting. Everybody thank Peter Temple for his time today. And Addenda, I guess I'll just have, you could just close out the hangout at your convenience now, Peter. Very nice to have met you.
Yeah,
and,
good to meet you.
And may dollars rain down on you and your loved ones in 2016.
U.S.
Next time I want to talk about where you're going to hide out during this crisis.
U.S. dollar is what I want. Okay.
Thank you.
Good, take care.
All right. So I'm not going to have time for a wrap-up because we have another show in 8 minutes. Guys, I'm sorry that we ran out of time. I want to thank everyone for their contributions. Artem, Jay, Forex Pipper, Addenda, Fab, Izzy, Anise, Mystic, Sinatra, BW, Jax, Ron, Roland, good morning. JM, Abel, Graham, SW, Doug Pan, Peter, FX Video, Planet 372. I'll see everyone tomorrow. Crude's heading towards my 38 target. After watching Peter, I'm going to book everything at 38 if I get there. And I'll see everyone tomorrow. Good hunting. And remember, my friends, with what we have coming, the people that you love in your life aren't mind readers. So grab your husband or wife or boyfriend and girlfriend and kids and tell them you love them today, because they can't be mind readers. And I'll see everyone tomorrow. Good hunting. Adios.